Hey, everybody out there. Welcome back to Return Us, where entrepreneurs, future tech founders, and global thinkers tune in to discover the next big frontier. Once again, I'm Marvin.
And I'm Will, and today we're diving into news that is going to reshape where capital flow is going and where smart founders should be building.
Right. So, checking us out. A few days ago, the world learned that the state owned institutions across Africa are now managing nearly, and I'm going to say this right, 1 trillion US dollars in asset. That's right, I said it. 1 trillion nearly is pooled. And this is according to Reuters. Just for context, this isn't some hypothetical number. We're talking about public pension funds, central banks, newly launched sovereign wealth funds, and we're talking all across Africa. It's big money.
And it's crazy to think about like the continent was so long dependent on a lot of external aid, foreign investment. A lot of people made it seem like um, there was not a massive capital base there. And so the question I want to start with, Marvin, is what does this really mean for entrepreneurs and founders listening to us right now?
Yeah, that's the $1 million question. So this $1 trillion, I think one thing it does is it reflects what's going on in Africa. It reflects the shift, and it also reflects how African economies think about capital. So instead of relying on the old model, which is concessional finance or foreign aid, countries are they're using their own means and they're increasing domestic and locally managed funds, pension savings, central bank reserves. So we're seeing a shift towards independence and sovereign wealth funds and those sort of things. Now I guess the question is why that matters. Well, because it signals growing internal investment engine. So internal is the key word. It shows internal investment. With more domestic capital under management, there's more potential for funding development. There's more money for infrastructure, and crucially, it provides sector innovation. So this is a lot of this can be followed up. There's a good article in the African Leadership magazine that you guys should check out. We can post that a little bit later.
So in theory, those pools could be tapped into for real, for startups, for tech ventures, for infrastructure, for new economies, not just aid or external investment anymore, but it's local capital looking for productive allocations. That's huge.
Exactly. Interesting. And the fact that 5 new sovereign wealth form foundations were launched in 2025 alone. I'm going to say that again. So in 2025 alone, there's 5 new sovereign wealth funds launched. And we're talking about countries like Botswana, Kenya, Nigeria. The the list goes on and on. So the key word here is momentum. We're seeing that shift. We're seeing that direction. We're seeing that growth. And we're seeing that unified movement all across Africa. You know, at the same time, though, even with this growth, African sovereign wealth funds still represent only 1% of the global total market of sovereign wealth funds, and so that's 1% of the 14.3 trillion that's represented. So, interesting enough, the scale is significant for Africa, but we all know there's always room to improve and to grow. So, domestic innovators and foreign co-inventors alike, there's opportunity.
So Marvin, you hit it on the head, right? The kicker for founders is that, especially with those with global ambition, this shift changes the investment landscape. Imagine raising capital or getting support, not just from venture capital firms in Silicon Valley or European investors, but institutional African capital or funds deliberately designed to support uh, investment, foreign direct investment, and development. And that's going to be key, right? Those type of things are going to shift the way people even view Africa. I remember, I'm paraphrasing, until Africa is respected, blacks won't be respected, right?
Amen.
And with these numbers, and with this institutional investment, and also the possibility now of bringing in other type of investors, this will absolutely bring respect that has been deserving of the continent for a long time. What do you think?
Man, I think you're 100% right, man. We got to think about early stage ventures. This is who it's going to be really key for. This is going to be good for people with infrastructure and tech, finance, financial tech, fintech projects, agri-tech, climate tech, logistics. All these sectors are going to benefit from Africa's sovereign wealth funds. and it's going to help them target and deliver upon new growth. But we're always talking about the founders, because those who start and those who leverage are those who win. So for founders, that potentially means a massive new pool of capital, and that helps them to grow locally, and that's what we want to keep highlighting on. Instead of looking out, they can look inwardly. Now, as you know, for those thinking about crowdfunding or diaspora-backed ventures, this shift could be a catalyst. As domestic capital accumulates, there's greater legitimacy, there's more public policy, there's more regulatory frameworks could begin to favor the private sector growth. So that's why we're always going to beat that drum until it can't be beat anymore. Crowdfunding plus domestic institutional capital combines for great things and for new ventures to be birthed. Right, Will?
Absolutely. You hit it on the head. So Marvin, for founders, right?
Yeah.
Plotting a wish list of startups in Africa, say, or even the diaspora entrepreneurs looking to launch a mission-driven project. What should they be watching or prepping for that this capital pool, this emerging capital pool, will want to cover?
Well, it wouldn't be this podcast without a list. So here's what I would be looking for, these top three things. So if I was a founder, I would monitor which African sovereign wealth fund or pension funds are new and which growing. So, just keep an eye for which ones are coming on board and which ones are aligned with your sector. Number two, position startups in sectors like lead to track development. So you want to think about state-backed capital, infrastructure, fintech, climate, health, renewables, consumer tech. And then you want to explore hybrid funding strategies as well, So again, keep an eye on crowdfunding, especially dysphoric or global investor networks. And you just want to make sure whatever you do bridges the gap between domestic capital and global markets. So if you can employ these strategies, but the key thing and the common denominator is to know what's available to you.
And also, ask yourself a question. Take yourself outside of being a founder and thinking that your idea is the greatest idea. In your mind, it may be, but are you thinking like an investor, right? Are you thinking about building a strong governance and transparency practice from day one? Funds looking to invest, looking for institutional capital, they want to see solid financials, clear impact of growth potential, regulatory compliance. That helps them build trust in your startup. That helps them build trust in your idea. And that's something that we don't always think about as founder. Even as a founder of myself, I constantly have to remind myself that when I go and talk to someone who may be interested in investing in us, then our finances need to be solid. It doesn't mean that we have to have a lot of money. It doesn't mean that we need to be generating a lot of money, but we need to be able to clearly show that we can manage our finances. Right?
Yep.
The other thing is, what is our clear impact? What are we doing? What is it going to do to move the needle in that sector or that region? And then the potential, if they were to invest, to move that needle further and faster, right? And then regulatory compliance. Now, it's a little bit easier for us in the sense that we, as a crowdfunding portal, are under a lot of regulatory compliance.
For sure,
But
for sure.
for anyone, we now live in a world where you can use something like ChatGPT to build what we call your written supervisory procedures and your policies for your company. And in maybe, a few hours, 2-3 hours, maybe one day, you can have all the policies and all the procedures of things that could potentially happen to your company. And when investors see that you've put that time and effort into it, then they know that you are serious. And so a lot of times, for that reason, they know that you are ready to receive investment. So taking into consideration those three things, strong financials, impact and growth, and then your regulatory compliance are going to be key to helping you grow.
That man, isn't it what all these kids are doing this day? Stamp it. That man is spitting over there, folks. Stamp it. But yeah, we're throwing around that trillion number, and it's not just the headline. It's not just, okay, look, $1 trillion, because a lot of people are not going to be able to comprehend that amount of money. But what's the takeaway? For founders, the $1 trillion milestone is more of a signal. And it's not just a signal, it's a chance to step into new capital, to build in new markets, and to align yourself into opportunities that have huge upside. So keep your eyes open, take advantage of it.
And if you have an idea and you're listening to this and you're trying to figure out where to go next, I want you to know that we are interested in specifically minority-owned businesses and ideas, but then also ideas that are focused on the continent of Africa. So much so that we've developed returnus.com, where you can submit your idea. We will do a pitch session, and then every week we're going to be giving one of those founders $100 for their pitch for 5 minutes, and then the opportunity to go ahead and get their company up on our funding portal so that they can get their company and their idea in front of the eyes of investors. And along the way, we're going to be giving help and development on the things and tools that you'll need in order to do that for investors. What do you think, Marvin?
I wish I could go in there and start pitching. Anyway, be a conflict of interest. But what I will say is, like Will said, remember to follow us on all social media streams. Head over to returnus.com. Will already gave the breakdown. We are looking for you. We want to hear about your pitch. We want to hear about your competition. There is a reward, but we just want to learn about you. And who knows? Maybe one day you're going to be aligned, and your efforts and your support are going to lead into taking advantage of this $100 trillion new capital, and you will be over here creating the next wave of innovation. So, don't miss out. Take the chance. Take the opportunity. Returnus.com.
Absolutely. Returnus.com. Don't miss out. Don't miss the opportunity to be a part of the fastest growing economy in the world. Africa is one of the fastest, if not the fastest growing economy in the world. The youngest population. 60% of the arable land is there, which means that all your food is grown there. And 30 to 40% of all critical minerals that we need for the future sits in Africa. If that is not an opportunity for you as a founder, then nothing is. So I'm excited about it. I know Marvin is super excited about it. Continue to build, continue to reach out to us. Please go to returnus.com, and we look forward to seeing you guys in the next episode of Returnus.
Invest smart, stay well. Check you guys next time.
Take care.